Hello everyone, welcome back in continuing the Ind-As 115. So today we'll be covering the section identifying the contract. So what exactly is the contract, and what are the main features or conditions which are to be fulfilled in order to book a revenue in all conditions, be it your belonging to any kind of industry. These kind of the condition should be met. So these whatever we are discussing today, you can refer the paragraph 9 to 16 of Ind-As 115. So what are the conditions? And one has to remember that all conditions should be fulfilled. So it's not something, either of or some of or the few of the conditions should be met. So all conditions should be met in order to book the revenue within this accounting standard Ind-As 115 or IFRS 15. So the first one condition is the parties approve the contract and they are committed for obligations. So like approval between the parties, those who are dealing it, one is a buyer or other one is a seller or the service provider or the service receiver in the case of the goods or services respectively. So the approval could be oral or writing. So it could be on the verbal kind of, because there are various business situations or the customs of the business where the oral transactions happen. So it need not be in writing, but approvals should be there, and approval should be in basis on the whatever is the custom of that particular business. And why it is required? Because the objective of saying that party should approve the contract and they should be committed to whatever their respective obligation, because the reason behind this, if at all they will not approve this contract or whatever your transaction or underlying the contractual this contract for revenue, so it will not be clear the enforceability between the parties, like the one parties will have certain obligation to fulfill that particular contract related to goods or services. So it will not be clear the enforceability of the contract, and also the approval also identify what kind of the obligations the parties have committed actually. So in a situations where the actual signature per se is not available, but during the customs or during the practice of the transaction in the business, if you see that it has already been approved, even if it is not in writing, so the revenue recognition should not be delayed. So that is something which is to be kept in mind, because it should not be focusing on something to be documented properly, or the emphasizing on the writing itself. So if at all it is something which is delaying for getting it into writing, but all other conditions are done, so that you can go ahead and you can book it the revenue. So the next one is each party's rights can be identifiable. So each party's rights can be identifiable here, like why this clause is there, because for example, if either of the party, after entering into the contract, either of the party wants to terminate or to backstep the from their duties or their obligations, so the other party should have a right. I mean, it should be identifiable what kind of right he or she has in case of the breach or the cancellation of particular contract or assignment. So that's what it is very essential to know, that what are the rights available. So it should be properly identifiable that what kind of rights are available to each of the parties, so that in case of the breach or the termination, so either of the party or the aggrieved party can claim the compensation or whatever the penalty clauses are there. So coming to the next one, the third condition says that payment terms are identifiable. So as we move further in this standard, the transaction prices are very essential, because there are many things which are based on the variable consideration where the estimation are required. So keeping that into the mind, and after calculating those based on the expected value or calculation on such variable or kind of this portion, you will have a one transaction value which may or may not be the same which you are actually paying or receiving from the either parties. So that transaction value is important. So to arrive that transaction value, the payment term should be identifiable, because those transaction value will have the impact of the whatever you are giving, your discounts, rebate, your variable components, etc, etc. So we will talk about that, what exactly is a transaction price and how it will be allocated to the different performance obligations. So we will come along in the future for in the series of this particular accounting standard. So that is what it is very important to identify the payment terms which are identifiable. So then a fourth one is the contract has a commercial substance. So why this has given? Because there are many cases where the transaction related to revenue has maybe entered into just because to inflated the revenue. I mean, like the transaction is such that which do not have the commercial substance. So the standard wants to emphasize that whatever is your booking is under this particular accounting standard, it should have a commercial substance. Means the transaction should have done for the business purposes. It's not for something for just to booking the revenue. I mean, you are making something which is inflating your particular revenue or profit and you are booking it something. So it should have a proper business and the direct business activity and the commercial substance. So you can say that all illegal activities or which are not valid, those will be out of the scope from this accounting standard. So the next one is collectability. So collectability should be probable. So it should be the standard is trying to say that it should not happen that the other party who needs to pay the consideration, I mean the intent should be that the amount will be collected. So amount will be collected in the sense it should not happen that you will book the revenue and you will say that this is my receivable and I am going to recover it in future, but where the intent or the particular party doesn't have the capacity to repay it. So I mean, while entering into the contract, you should have a clear establishment of the fact that the other party is able to pay this particular consideration when you are entering it, because this condition was there in the old accounting standard, whatever you are using in your Indian accounting. So collectability is one of the important aspect in all accounting standard related to revenue, even in the past also. So coming to the other one, like you will have a situation where contracts which has a no fixed duration, or maybe it's automatic renewable. So here specifically the standard says that in such situation you need to recognize the revenue only that portion which is contractually binding, like whatever is the dates are mentioned in that particular contract, even if it is a renewable or it's kind of the unending duration, if at all, I mean, like coming on to the after the end of the term of the particular contract it will be renewed or something. So whatever is your contractual term which is identifiable at the time of entering the situation, that portion or that duration will be used for recognizing the revenue. Another one is they want to emphasize, like some of the cases where the contract is such that either of the party can cancel the contract and nobody has to compensate to other party in case of they cancel the contract. So these kind of contract will not have any validity, or these kind of contract will not have any the basis or the case to book the revenue under this accounting standard, because many of the cases what will happen, like they two or one or more party they will enter into the contract, and the contract itself has the clauses that either of the party can cancel the contract even without compensating to other one. So this will not have any commercial or any sense for that, and no party has any obligation, because per se any time you can close the contract without penalty or without compensating to others. So these kind of unilateral enforceable right to terminate the contract without penalty, so these kind of contracts are specifically excluded from this particular standard, and those will be not be covered. So whenever you are doing audit or whenever you are a consultant for evaluating these kind of situations, so you need to understand, or you need to take care, or you need to get the management representation per se, like this kind of situation or this kind of paragraph or these kind of clauses not at all exist in any of your situation. If at all it is there, you cannot book the revenue. So the next one is above 4-5 condition which we talked about. So if at all you have already assessed at the initiation and you book the revenue, so the accounting standard says that you don't need to reassess each and every time. So there is no need to reassess the conditions during the life of the contract. So once you test all these conditions at the initiation, so that is it. After that, there is no need to reassess the condition each and every time during the life of the contract. So now the another situation could be like since we have already mentioned that all conditions should be fulfilled before booking the revenue under this accounting standard. So there might be a situation where either of the condition is not fulfilling at that particular time. So standard say that till the time all conditions are met, you need to hold that, and once it is completing all conditions, then you can go ahead and you can book the revenue. So for the timing, if it is not meeting any of the situation, any of the condition, you can book it as a liability or you can book it as a asset, like keeping in the view, keeping in mind the other accounting standard which it talks about that if it is not falling in the revenue recognition standard, so you need to just show it either the liability or asset. If you receive the money without any consideration or without any underlying contract, so you can simply say that this is a liability kind of. So these situations you have to hold that till the all the conditions of the contract is fulfilled. So once it is fulfilled, then you can go ahead and you can book the contract. So here the idea was like to understand that what exactly or the what essentials are there. So whenever you are reviewing or whenever you are dealing it with some these kind of contracts which are covered under the Ind-As 115 revenue standard, so these conditions should be established and should be substantiated when you are referring or you are making the establishing the fact of the whether to book the revenue in this situation or not. So this is it for this video, and we will be coming for more for this particular standard in the near future for the sake of understanding. So if at all you have any specific query related to any of the particular situation or particular transaction related to this accounting standard or another, feel free to mail to us. We will be happy to help you. Thank you very much.